Hey investie besties, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank y'all so much for coming back. I do appreciate all of you guys being here. Thank you guys so much for 7,500 subscribers. Oh my goodness, it literally just like clicked in my head when I went back to look at the analytics that we crossed the 7,500 subscriber mark. So thank you to all of you who continue to come back, who continue to engage, who support me, who talk about my channel on your channel, who tell your family and friends. Thank you so much. So let's get right into this. So the past two videos I've been talking about, some great stocks and funds that my husband and I are going to hold forever. Well, today is the long awaited video. So we're going to talk about 10 stocks that my husband and I will never buy. Now, again, like what I've said in the previous two videos, these are all our personal choices. Okay. So personal finance is personal. You may not agree with me. That is okay. We just want to keep things respectful because, I will bless and block in a heartbeat. Okay. So, you may not agree with all these companies, but to us right now, we would not buy these. Now, things could change because businesses change, they change directions, they change management, they change trajectories. But, as of right now, my husband and I will not buy these companies. I have my little post-it note because that's how I do in these videos so I can remember and stay on track. So let's get right into it because there's a lot to talk about. Now, these selections are in no particular order, okay? I just am going to just talk about them. So the first two companies that my husband and I will not buy, and it may not come as a surprise, maybe it'll come as a surprise to some of you, but it is AMC and GameStop. They right now are meme stocks, which means that they are just stocks that are really popular with a lot of traders right now. And personally, because I'm an investor, my husband is an investor as well, we like to buy and hold over the long term. It's easiest for us that way. And right now it seems like GameStop and AMC are like the forerunners of the meme trading movement. And we just prefer to have our money somewhere, parked somewhere where it can kind of just like grow consistently, maybe a little slowly over the long term versus, like going up 1 minute and then dropping the next minute, going up a lot 1 minute and drop. That's really kind of chaotic in my humble opinion for a stock to move on the stock market. And if you didn't know, GameStop is a company that sell a lot of like video games and video game accessories and all of that. And I think they're trying to get into the meta space too. Somebody can correct me on that if I'm wrong. And AMC is like a movie theater type of company. I've been to AMC movie theaters many times in the past, especially before the pandemic, but I haven't been to the movies at all since the pandemic started. But those are like the two main reasons for why we are not going to invest in AMC or GameStop, because like I said, we are not traders, we are like buy and hold. But let me know if you guys are into the whole meme stock movement in terms of like GameStop and AMC and tracking it. Do you trade in and out of it? Did you buy in early and you were able to make a big gain from it? Are you like holding bags? What they mean is that you're in the negatives a lot with these two positions. So let me know. Let's chat in the comments, okay? Next is Netflix. Now, I know Netflix just had some stellar earnings. I guess it was by the time I see this video, like earlier in the week or a couple days ago. And despite that, we still don't think Netflix is, I would say, kind of stable enough for the long term. So their prior earnings report, they actually lost like over 2 million subscribers. So I was really surprised, and a lot of other analysts were, that this earnings, they gained over 2.5 million subscribers. And I was thinking, I don't even remember anything on Netflix that would make me think a lot of people would subscribe. So, I don't know if they were fudging the numbers a little bit, but I am going to listen to the earnings report because I want to see what they have to say in terms of where that surge in subscribers came from, considering the prior earnings, they actually lost a lot of subscribers. Another thing that I don't like that Netflix is doing is that they're doing the whole password restriction. I believe if I pay for something and I'm not breaking any laws, I should be able to use it the way I want. But I think they just kind of brought it on suddenly, and people loved Netflix. A lot of people joined Netflix in the first place because of the freedom of being able to share their passwords with other people so they can almost like share the bill, if that makes sense. So, right now I'm just like on the sidelines. I want to see like the next earnings report. how, things go for Netflix. But right now, no. And I think also Netflix kind of got popular really fast because of the pandemic. Everybody was home. So of course the subscriber count and everything was up. So again, I'm just going to be on the sidelines just watching it because like I said, things could change. But right now, no. Moving on to Zoom. Zoom was kind of the same way with Netflix. Zoom kind of came on the scene and just instantly blew up when the pandemic happened. Like really became very, very popular. And I almost feel like the management kind of didn't know what to do. You know how something, if your channel goes viral on YouTube, it almost kind of like takes you by surprise. Now, keep in mind, you've been waiting for this to happen, but you're almost kind of like stuck in a fog. Like, okay, what do I do? What direction do I go? How do I process this? And I think that happened with Zoom. I think Zoom had a great opportunity at its disposal, and I still think it does, because in this space we're in right now, in terms of how we operate, not just as a country but globally, I do think there is a demand for like the whole digital communication space, in terms of I can talk to you guys through Zoom or Microsoft Teams or Google Chat or anything like that. So I think that if the management really sit down and really figure out how can we make Zoom, I think if they add more like background filter features, if they add like some emojis through the Zoom chat, more interactive features, I think that they have a lot of room to grow. But right now, and they have a lot of debt. I'm just going to keep it on the sideline and just watch from a distance. Next is Peloton. I've been at the beginning when Peloton first got popular, my husband day traded it, and we made some cash from that. But in terms of a buy and hold company, for me, because I'm a buy and hold investor, like an exercise bike company, I just don't see it being profitable long term on the stock market. And I know that they've been making partnerships with Beyonce and different clothing lines and all that, but still, at the end of the day, Peloton is an exercise bike. And so as an investor, as a business person, not personal, I think the bike is pretty cool, but as an investor, I'm thinking 5 years, maybe they just need some time, because they became popular so fast too. But right now, no, not right now. And their earnings haven't been the best either. So I'm not on the Peloton train. I don't even own a Peloton. I think the bikes look cool. Like I said, I like that it's interactive. You can talk with the instructors and all of that, but it's an exercise bike, and long term, I just don't see it. Next is American Airlines. American Airlines has a lot of debt. They are notorious for being late or canceling flights. They are severely understaffed, and I think they need to get a new CEO. So, and this is from personal stuff, like flying on American. My husband is like a platinum business member with American. A lot of frustrations all the time with their airline, but my airport doesn't have a lot of Delta flights or United, so you're kind of stuck with American. So I believe if there's a company that I just personally don't find good things in, then I wouldn't want to invest in it, if that makes sense. So American is definitely on that list. eBay is another one of those companies. I think the way that we are buying and selling goods online is changing. I think eBay really had a lot of the market share, like the late 90s, early 2000s, but now eBay just kind of faded into the background with Amazon and with Shopify and all these other sites that allow you to buy and sell things that you make, or if you want to do resell and all of that. And maybe it's because, again, they are suffering from what Blockbuster suffered from, is, not being innovative, not really trying to adjust with the times. And and I haven't even purchased anything off of eBay in years. Okay. It's been years, like 10 plus years. So I wouldn't invest in a company. Next is Beyond Meat. Now, again, I think Beyond Meat has something good going. They were really partnering with Pizza Hut and McDonald's, trying to get some of the vegetarian type of meat, plant-based meat into the stores. But at the end of the day, you have to have a customer base that will actually buy it. And I think people were willing to try it. But with Peloton, at the end of the day, it's a plant-based company. You know what I mean? Maybe if they combined with another food company, maybe, I don't know, Tyson or Purdue, maybe even General Mills, and maybe try to figure out how to, you know, make something that people would be willing to try. But again, it's nothing against people who, you know, are vegetarians or things like that. Again, it's just looking from an investor standpoint. Right now, I just don't see it because those two partnerships were not successful with McDonald's and Pizza Hut. People bought some of it, but not many did. So yeah, moving on, 2 more left. So Carvana. I really do like the whole idea behind it. You can go to a vending machine. You don't have to go to a dealership. You don't have to be pressured by a car salesman or anything like that. You can go. It's a cool way that you can get your car to come out. The biggest problem that I have with Carvana, besides the debt and the incompetence of the management, is that a lot of the car registration, or there's also some problems with like the titles, and again, this is a big thing because there's a lot of legality tied up into this. If I buy a car from Carvana thinking it's mine, but the title wasn't cleared and someone else really actually still owns it, and then I cross state lines, there have been a lot of cases and even news reports about this particular thing with Carvana, and I feel like if they can't fix that, it doesn't matter if they have a cool idea. It's not going to prosper. It's not going to profit into anything. And again, as an investor, until that's fixed, the whole title issue, then I'm just going to watch from the sidelines. So, you know, not right now. It's not on our list. And the last company that we will not buy is Carnival Cruise Line. I think it's probably the worst in terms of cruise lines. Norwegian is one of a great one. Royal Caribbean, but Carnival has a lot of issues, a lot of debt, even before the pandemic started. Just issues overall, even with the ships and how they're functioning. And so I figured, you know what, why buy the worst cruise line? Get one of the other ones. They're better. And I think they look more modern and updated. And they have management that's really trying to navigate with this, you know, uncertain time we're in, which is the pandemic. A lot of people are starting to cruise again, but, you know, on the back end, there's still some shutdowns, the supply chains, inflation is, you know, hitting a lot of their customers' pockets. So, you know, right now, in terms of, even if I was going to go into like the whole travel industry in terms of buying companies, cruises would probably be one of the last things I would do. I would probably just stick to like a Disney, or like maybe Southwest Airlines, maybe a hotel or something like that before a cruise line. But that's my personal opinion. So those are the 10 companies that my husband and I are not buying. Again, things could change, but right now, it's a no for me, dog. So let me know down below some of the companies you guys won't buy for whatever reason. I mean, everybody has their personal reasons for why they won't buy anything. Like I say, personal finance is personal. So let's just keep the dialogue open. Let's communicate and just chat with your sis down below. So again, thank you guys so much for watching. Don't forget to subscribe, like, and share. And I will see you guys in my next video. Bye-bye for now.